Hello there guys, welcome to video number 2 for the Scalper strategy. Now that we know what it is we are looking for, it's as simple as a 1, 2, 3, just a break and a pullback in any direction. In an uptrend, it always starts with a break up and a pullback, and in a downtrend, it's always going to start with a move down and then the pullback. The pullback is also called a retracement. Now that we know what it is we are looking for, the problem is that these 1, 2, 3s, these ABCs or break pullbacks, it happens all over the chart. It happens on any time frame. So it's difficult to choose the correct one, but this is what the secret is. It's where do you find these 1, 2, 3s, these ABCs, these break pullbacks. The where and the what needs to be married together. This is the key. So anywhere traders find levels important, this is where we need to be focusing on. We need to look at these levels. Whether it be an uptrend or a downtrend, or a support level or a resistance level, or a Fibonacci level, we need to be very wary at when prices are coming down into that level, and especially so when prices comes down to that level for the first time. What is a level and what is structure? It's a point. When prices hits the level for the first time and it moves away from the level, it pivots off the level and comes back, and you can have 1 and 2, and you see 1 and 2 points then and draw a line, you will find a level or a structure or a pattern. So this is an upward moving trend. You see a pattern, it's going higher, making a higher high than this one. It comes down and it's unable to break down below this point here. Then we have an uptrend. So a pattern trader, a level trader is going to be looking at 1 and 2 as levels, and we too are going to need to be looking at these levels. So any point on the chart that you can draw 2 points, any structure that you can have 2 points, that is a level, and sometimes it forms a structure or a pattern. In this case, the pattern that we have is a double top example. So prices comes up, it comes back down, it goes up, and it's unable to make a higher high. So now we have a double top. So this levels here are going to be important. So when prices moves up in a trend and it goes and it's unable to follow through, and you have a point that is equal, or if it's 5 or 10 pips below or higher than this, it doesn't matter. It's still called a double top. Then this point number 2 here is where we would be zooming in and trying to find our setups. So the setup is going to occur all in this trend moving up here, but this is the ones that we just ignore. We are looking only at when we are at particular points on the chart. And another thing with trends and patterns is we need to find the extremes. In this example, we have a downward moving trend, and here the angle now changes. The angle becomes more steep. These are not the extremes. We need to point number 1, number 2, and then drag the line down and then get to the extreme. This is where we are zooming in and trying to find our ABC 1, 2, 3 pattern. The ABC 1, 2, 3 happens here and here and here, but these are lesser valued trades. If we are taking trades like this, then we are looking at lowering our risk. As soon as prices comes back to the extreme level of the trend, then this is where we are taking our full risk. We are looking for our 1, 2, 3s, our ABCs at these extreme levels. More areas on the chart. Pattern traders are going to look at this bullish pennant pattern. where you get these sorts of patterns. I'm sure you all are familiar with this, like triangles. We're calling it a bullish pennant pattern here. Elliott Wave calls this a ending diagonal. So it doesn't matter what it is called, as long as we know when we can see prices going up, comes down, unable to go up further, comes down, we have our points 1 and 2, 1 and 2. Then we drag our lines, then we move our lines across, we extend it, and then every time prices comes back to our existing line, this is where we are now looking for our examples. So we would be looking for our buy example here, again buy example here, buy example there, and then a sell example here, buying example here, and then here we are still looking for our selling example. However, our room to move down toward this line is too small, so we would take our selling example here, but at a very low risk, because there is no room to move. Yeah, we have drawn our line, and this was our barrier based on this point and this point. Our 1 and 2 are very important. We need at least 1 and 2, and then we can extend it and find the next time price comes back to this line. So our ABCs, we will look for that pattern here and here and here. Yeah, that's in a pennant. And then we have our bearish pennant patterns. We have 1, 2, and then this would be a non-tradable pattern, because there is no room to go. You can look at it coming down, it's unable to do its thing. It's unable to follow through further. It just comes back down. It hits this pennant pattern again. We're looking for buy opportunities. But look at the value there. If we bought here, this is our target. So we are not interested in that. But as soon as prices comes down here, and we can see there is a ABC pattern here to go short, we will take that trade. Then we find the pattern again, another bearish pennant pattern, always just trying to find points 1 and 2 and creating a pattern. Because pattern traders are looking at these points, and we would be looking at buying and selling inside here if it is worth doing so. So we would be trading inside the pattern and also the breakout. So there will be many opportunities to try and find these ABCs at these areas. Zooming in on these areas is what we'll be doing in this section as well. This is an upward pointing flag. You get your point 1 and 2. You extend your line. This is where you are looking to sell. You're looking for your ABC pattern to sell, and your target would be this here. So do we have enough room to move? If so, then you will take that trade down. And then if prices reaches this barrier here, then you would trade it up to your extended line up here. So inside the upward flag you would be trading, and also when prices hits here and you find a buy signal, you would even take the buy signal to try and get up here if there's enough room. And if, like in this case, you get a, you'll probably, if you're zooming in, you'll probably find your ABC, your 1, 2, 3, your break, pull back to the short side, and then get all of that pips coming down. So patterns are very important to try and trade. Inside the pattern we are trading, and also we are trading the break and the pullback. In this case, the break and the pullback comes within the same time frame, so we can do that. Usually we are zooming in on this price here as prices are breaking out. So if this is a 4-hourly chart and prices comes back here to this important level, you found it because you've drawn 1 and 2 and you've extended the line, then you'd be looking at the lower time frame here, trying to find the entry. But in this case, you even get your entry on the same time frame. In your rising wedge shape, this is again an ending diagonal for Elliott wave. It doesn't matter. If we can find the names, doesn't matter. If we can find points, it's quite easy, because when prices are going up, that's point 1, it comes down, comes back up, comes back down. You have all your points now to be able to draw the extension. So whenever prices are reaching the extension again, this is where you are zooming in, trying to find your 1 to 3s going short. Here you are looking to buy. Up there you are looking to sell. Down here you are looking to buy. All the time, as long as there is room to move. I'll talk about room to move in a later session. And then here you'll be looking for selling and buying. Always looking at these points, looking for the potential breakout, because we never know when these prices will break out. It's going to do one of two things at these levels. Either it's going to break out, or it's going to respect the line and come back into the trade. Sometimes you get a manipulation first and comes back in, and sometimes you get a manipulation and it all goes back up. But whatever it's going to do, it only has those two choices, only two alternatives. It's either you are going to break out there, or you're going to come back and rejoin this rising wedge. The important part of this lesson is knowing that these are the areas that you are looking for trading, whether it be breaking out or whether it be respecting and coming back. Because we never know which one of the two it's going to do. We never know when to buy or to sell here. Whatever we see on the lower time frame as we zoom in, that is what we will do when we see our ABC pattern. So on all of these shapes, we need to start practicing recognizing these shapes. They are all going to be the same. Once you have 1 and 2, you can either see it respecting the lines again or breaking out. But what we need to know is that these are profit points. These are areas on the chart that all traders are looking for. And we need to be looking at these areas as well. Not inside here. That is the issue. Not inside here. Not as these prices are moving up. Not inside these. It's at the extreme levels that we are looking for. Yeah, we are looking at the important points, and I call them profit points. So there are many different examples of patterns, but if you can just join 1 and 2 and extend a line, 1 and 2 and extend, then that would be your pattern. And that is what pattern traders are looking for, and that is where we need to be looking for our ABC or 1, 2, 3 or break pullback entries. Now, I was talking about zooming in all the time. Yeah, now what is it that I mean by zooming in? Let's take a look at this daily example. Here is our pattern. We found point number 1 and point number 2, and there's an extension. Here is point number 1, point number 2, and then we extending the line. So we know that this is the area that we are looking at trading. So we know that we are either looking for breakouts to the long side or a respect and to come back inside. That's what we know from the higher time frame. So if we look at this wick that is formed here, it's gone up to the highest point and come back down. Just zooming in, that wick is worth about 75 pips there. So it's gone up and come back down. Now that same wick on the 15 minute is this. This is how it looks like. So price has made its high, comes down, and that's the low. Now look at the price action here. You have your point 1, your point 2, and there is your break and your pullback. Just watch how nice this same chart looks on Heikinashi. That's your break. So this is the pattern we are looking for. And where are we looking for this pattern? We're looking for it at the points, at the extremes. Let's take another example on the daily chart. Here we have another wick. Prices comes down to this line here and it comes there. So this is the wick that has been highlighted there. This is the wick on your 15-minute chart. So prices has come down and then unable to follow through, comes down, and you get your break and your pullback here. So this is what we are looking for, and this whole area is where we are looking for it. So just to go back to make sure you are getting this. This is your wick. This is your area on the chart that you are looking at. If I go even further back, this is the area. So you know what you are looking for. You're looking for a break and a pullback. You're looking for the break and the pullback. In this area, as prices are hitting your extended line. You've drawn 1 and 2 extension, so this is where you are looking for your pattern. Zooming in, you're finding that on your lower time frame, on your 15-minute. So you have found your break pullback on your lower time frame. Same examples here. Break and a pullback. So the two needs to be married together. Where you are looking for the pattern, where you are looking for your break pullback is very important. Where you are finding the break pullback is the most important part of the strategy. Another tip on the where, it's when prices are hitting levels, and this you need to always come back to. Always think about these levels. When you cannot draw a trend line or you don't know where the support or resistance is, then these levels, I would like you to come back to this chart again, is your double zeros, your 30, your 50 and your 70. So these four are the most important, and especially so with your euro versus dollar and your pound versus dollar are these levels. So if you cannot draw a support level, then you need to utilize these levels here for help. And when we go through the live charts, then I will show you how I draw my levels using these numbers. So next time we're going to be looking at the when. So what you have so far is what it is you are looking for, which is the break and the pullback. And you also know where to look for it. You need to look for it at extremes. You are drawing your line. You have your point 1 and 2 and you extend the lines. Then when prices reach that extreme again, then that is where you are looking for your break and your pullback. The next section will be looking at when you need to trade this. The when is very, very powerful. We're using another free tool. I'll show you that in the next session. And you can also use it while trading news. So that would be very, very exciting. So see you in the next one. Thank you for watching. Bye-bye.